We've analyzed geopolitical regimes since the beginning of the 20th century. And what we see in the data set is that the long peace that we had since the end of the Second World War is truly over, stopped at the beginning of this decade.
Welcome back, ladies and gentlemen, to the FT studios here in London for the latest episode of our PWM Tea Break with my special guest, Anna Rosenberg, Head of Geopolitics at the Amundi Investment Institute. One big event was the Hungarian election, quite a seismic vote, the ousting of Viktor Orban after 16 or 17 years. And the ramifications we've been writing about in PWM, well beyond Central Europe, extending to Russia, to the US.
The outcome of the Hungarian election is beneficial for Hungary and also to the EU, but I also wouldn't overstate this issue, because even though we had Viktor Orban being a stumbling stone to further European integration over the past couple of years, the EU is a bloc of 27 countries. Like in a family, there's always going to be, disagreements. And ultimately, Orban, most of the time, always caved. So right now, that is out, which will likely lead to faster integration in the short term. But it's only a matter of time until you have another government in place that, fills in the different group again, and then you have new friction.
Bearing in mind that complex multilateral patchwork you've described there, do you see the energy now as the primary geopolitical factor in the impact on portfolios?
We've analyzed geopolitical regimes since the beginning of the 20th century. And what we see in the data set is that the long peace that we had since the end of the Second World War is truly over, stopped at the beginning of this decade. And conflict patterns that resembled the 40s and also the pre-World War I period are coming back. So there are quite a lot of similarities between pre-World War periods that we're currently living through. And that's not going to go away, because the reason we have this high level of geopolitical risk is not just the election of Donald Trump. It's a variety of megatrends that has been responsible for that. And the megatrends have been playing out for a few years, and they will continue to play out. So there is economic warfare, which we've been having since 2016, tariffs, sanctions, export controls, now actual naval blockades and maritime disruptions. It's the great power competition between the US and China that's going to intensify. It's the impact of climate change, the political impact of climate change, the opening up of new maritime routes, resource competition, and we are in a new tax and arms race, like we saw during the Cold War. These are some of the megatrends that are contributing to a new geopolitical context that we're living in. And we have to recognize that. I like to say sometimes that geopolitics is the new macro, because it's not just about risks, it defines trends and investment ideas. The geopolitical backdrop decides or informs how policymakers make decisions, cut interest rates or not. That's because of geopolitical context. In such a world, gold will continue to perform well, because when you don't trust in someone else's currency anymore, if you end up being in a war, what do you trust in? Historically, it's been gold. We're in a world where trust, again, is low. What does it mean? You need to lower your dependencies on energy, on food, on supply chains, on technology. Anything that supports this independence of actors, one from the other, is going to do well.
So when Karen Schwock from the Lucid Family Office in Israel was writing for us about an end to the traditional international relations, the strategic partnerships, in this environment, liquidity becomes absolutely paramount. Is that a description that you recognize?
It's important that we recognize that there is a lot of risk out there and that it will flare up in situations like we're currently facing. I'm not saying we may be heading for another big war. That's not what I'm saying. I think we cannot confidently say that. But what we can say is that this level of risk is here to stay, and that requires treating geopolitical factors, as I said, not just as a risk component, but as an investment theme. And you need to think about your portfolio in a way that allows you to be flexible, to be diversified, to be recognizing of the themes that are going to do well in this environment. And so to that degree, I agree.
And we were both in Asia last week, yourself in Hong Kong, I was in Singapore. Which jurisdictions will be triumphing from the geopolitical uncertainty?
The reality is that the situation in the Middle East is not going to go back to what it was prior to the war. Like in our base case expectations, we're going to get a muddy deal between the US and Iran, which sees traffic through Hormuz improve somewhat. But the Israelis are not going to be happy with the regime staying in power. So we're going to see ongoing covert operations to destabilize that regime, which means that the regime will continue to flex its muscle, intimidate the region, intimidate Hormuz, which really undermines the business model the Gulf has been built on. And unless there is a holistic diplomatic solution with Iran, which at this point is fairly low likelihood, or there is a holistic regime change in Iran, I think this business model of the Gulf will continue to be challenged. That doesn't mean that it's finished. It just means that, again, we have to embrace that risk, live with it. Ultimately, if there is a flashpoint between the US and China, it will likely play out in the South and East China Sea. So you could say the same for Europe with the Russia-Ukraine war. So wherever you look, there are tensions at the moment. And as a result, we have to look at safe havens more from a perspective of diversification that allows you to adjust when something happens.
And that brings us on really nicely to a question about that move away from the dependence on the US and particularly the US dollar. And this was from Nezreen Holmes, who works in private equity in London. And she's saying, Anna, to what extent do geopolitical tensions and the growing use of non-dollar currencies in global trade, especially in the energy sector, threaten the long-standing dominance of the US dollar in the international investment system?
Reserve currencies are not a given. They emerge and they fall with the rise and the decline of empires, which has been very nicely laid out in Ray Dalio's book, The Changing World Order. And I agree with many of his findings, and he points out that the US is displaying many symptoms of an empire in decline. And I agree with that. And the diversification efforts in the dollar, I think, kind of follow these narratives. What is interesting today is that how the Great Britain lost its reserve currency status was when they lost control of the Suez Canal. This is why maintaining the Strait of Hormuz open is of fundamental importance to the US. Not just, I'm not talking about the currency, but just as a principle of freedom of navigation. That is a core US principle the US cannot compromise on. There is a lack of trust, as we discussed, which means that other currencies like the renminbi will unlikely take the position of the dollar. And other currencies like the euro are too small in terms of their capital markets possibilities. We are likely going to see a slow ongoing diversification from the dollar with more pockets of currencies popping up. What we don't know is how AI is going to affect this story. We really don't know. It may be that it strengthens the role of the US again. And the US comes back because one of the factors that is contributing to an empire in decline is the lack of innovation. That's not the case with AI.
We hope that you're not replaced by any agentic robot anytime soon. I can't see that happening. Thanks, Anna, for joining us today.
Thank you very much. It's a pleasure to be here.
That's it for today, I'm afraid, dear PWM viewers. Please send in your questions for next week's PWM Tea Break, when we will be identifying some of the key investment themes emerging from today's uncertain climate. And please do join me once more for the PWM Tea Break.